let me welcome Addison Snell, CEO of Intersect 360, is going to give us a great overview of what's happening within the HPC and AI market and how all these companies and end users are dealing with this pandemic. So hopefully, which is coming to an end. So Addison, please take it away.
Yeah, thanks, Brian, and always thrilled to be involved in the HPC and AI advisory councils. These are such important events, and I'm looking forward to the ability to do them in person again soon. I'm sorry that I'm not in the UK for this, but delighted that we've at least had these Zoom presentations make it easy for us to present remotely. We're now limping back toward the idea of in-person events again. I am fresh off of BioIT World, which was the first in-person HPC conference I attended in 18 months. And I'll say from my own standpoint, it felt pretty good. Certainly the attendance was lighter than it would have been otherwise, but there were people there, and it was worthwhile for me to get back in the room and make those connections again. Dan Olds and I will be at SC21 in St. Louis coming up. I know that not everyone's going to be there. I know that some people aren't going to be. A lot of people are choosing not to go, but for our standpoint, we're going to go and check it out, and looking forward to presenting on what we see there in some presentations yet to come. I'm going to very quickly go through an overview of a lot of our research, and there's a URL there on the top of our title slide, intersect360.com/presentations. On our website, you can find some full-length webinars on a lot of these topics that Dan and I have given. And speaking of Dan, for those of you who still have not been aware, I've been thrilled that Dan Olds has joined Intersect 360 Research since last March as our new chief research officer. That's taking over the title previously held by my partner and our co-founder, Chris Willard, who retired and is still involved as a part owner of the company as a trusted advisor. But Dan, I'm just thrilled that he's involved. He's a well-known and occasionally respected analyst in this space. And many of you will know him not only from his participation with HPC AI Advisory Council, but also as a coordinator of the student cluster competitions. And I'll have another word about that, or Dan will later on in this talk. And this is something that I was very clear with Dan that we not only want that to continue, we want to see how we can augment that as Intersect 360 Research and really keep it going. For my whole time span in this industry, people have talked about how do we help develop the next generation of talent in this space. And Dan is someone who's actually been actively doing something about that. These student cluster competitions are terrific in terms of introducing more people to HPC going forward. So thanks to Dan. And this is some of the data that's come out of some of the early surveys. He's helped us with HPC technology survey, looking at things like CPU usage and AMD's growth in this space, or what servers are running, or what server vendors people have here. The thing I wanted to point out there is the high proportion of end users who think of NVIDIA as their HPC server vendor. Putting them on the list wasn't an accident. I know that NVIDIA sells through their partners, and NVIDIA is not really the end server vendor, but a lot of people think of them as NVIDIA servers. So we have to sort that out when it actually comes to revenue market share, but NVIDIA really increasing its mind share, not only as a processing element provider or a networking element provider, but as a server provider. And that's interesting in this space. We're looking at, of course, NVIDIA dominates the GPU space. Other NVIDIA here is really best interpreted as not only all of the other types of NVIDIA, but also could gaming GPUs or older versions. But also, I just don't know what the brand number is. So I just checked off NVIDIA. What'll be interesting is to see how some of the combinations of CPU and GPU really start moving forward. People have a high perception or strong perception looking forward of CPU only systems, and especially GPU accelerated systems, not so much with FPGAs, but when we start looking at what are the combinations of CPU and GPU, the thing that shows up strongest are the x86 plus NVIDIA GPU combinations, Intel Xeon with NVIDIA, AMD EPYC with NVIDIA. But that's not really how the market is starting to evolve, where we're looking at AMD is already in the market with its own CPUs and GPUs. Intel is going to come out with its own accelerator. NVIDIA, with the pending acquisition of ARM potentially, having ARM together with NVIDIA GPUs. So we're starting to poll how do people feel about those specific different combinations looking forward. And it's still the NVIDIA GPU combinations that tend to be the strongest there, but only barely. And AMD is right in there. Intel is just in there. And this is something where there's going to be a lot of movement around that in surveys to come. So we're going to keep tracking that as well. What this really leads us to that we've been talking about is this notion of new definitions of scalability. And I wrote an editorial in HPC Wire about this, where, hey, we're high performance computing. We know all about scalability, but for decades, scalable has been kind of a synonym just for bigger, right? We want more cores. We want more flops. We want more IOPS, more bandwidth, more whatever. Some lower latency, sure, but bigger, bigger, bigger. And now we're getting into more subtle definitions of scalability that don't necessarily equate directly to more. And it's driven by really the one on the left, which is new workloads coming into HPC, where there are more and more end users that, first of all, had to adopt analytics with the whole big data revolution. And now we've got 81% of HPC end users that are either already running machine learning today as part of an HPC environment or actively working to implement it. So that's the 4 out of 5 end users who are doing that kind of mixed workloads. And that's driven the middle chart, where 91% of HPC sites have accelerators somewhere, even if they're not dominant, have accelerators somewhere as part of the computing environment. And that's just the on-prem portion. When we look at on-prem plus cloud, 2/3 of HPC end users have workloads both on premises and in the cloud. And this is really the new notion of scalability here. That's not just biggest. Can I support multiple types of processing elements? Can I support multiple types of workloads? Can I run it on-prem in the cloud? If I get to where I can't do any of those things, it stops feeling quite as scalable, regardless of how big it is. Those are just some of the things we're looking at. We also have data on liquid cooling. This has been on the rise, of course. The interesting thing here is that it's not just that that it's growing, but door chillers are the most common now. But the fastest growing is data centers that are adding the facility level plumbing to do the fully plumbed racks. And that's something that has long-term stickiness to it. Once you get data centers that are fully plumbed, it tends to stick around for a long time. So this is something that we think of is going to be a long-term trend. And of course, a big thing that we've been surveying in different ways as parts of different surveys is the effect of the pandemic on people's environments, their budgets, their projects. Is it affected your operations? Has it affected your budgets? 1/3 of HPC respondents in the past year's budget survey from earlier this year reported that their budgets were affected by the pandemic. And sometimes that was projects that were creating spending or bringing projects in. That's mostly in the government spending and biosciences, and I'll come back to that. But obviously, HPC was a big part of responding to the pandemic. How do we use supercomputing and bring that forward to combat a worldwide crisis? But then in a lot of other industries, of course, there was a recession. And so we saw delayed purchases, sometimes canceled purchases. purchases. And details of this, it says will go. This is an old slide, did go into our 2020 market model and 2021 to 2025 forecast. It was actually a very complicated model that we had to really sort out where was all the spending. So out of my career as an analyst, this was the most challenging market sizing and forecasting exercise we ever had to go through, because normally these things will all track together, and the pandemic economy really threw a wrinkle into it. And we'll give an update on where we are here, but just a quick touch point. The worldwide high performance computing market was down just very slightly year over year in 2020 from 2019 to $38.9 billion. That's essentially a flat market, which was better than our original pandemic adjusted forecast that we released in July 2020, when, the March 2020, the pandemic got going. April, we said, hang on, there's going to be an adjustment to the forecast. We got that out in July. We projected a 3.7% loss at that time, year over year. It came in better than that, partly because of the strength in HPC and responding to the pandemic, which I already mentioned was showing up in government spending and biosciences. Also had to do with Asia Pacific. There was strength in the supercomputing segment. We had Fugaku completely recognized, and I'll come back to that. But also, and maybe really surprisingly, when you go back to that July 2020 mindset, is that the economy in China, regardless of whatever the actuality was of the pandemic, however they handled it, the Chinese economy rebounded within the calendar year to where we didn't really see a full year economic effect of the pandemic within China. And for Chinese users, for vendors who sell within China, they actually had very strong years. And that combined with Fugaku led to strong growth for the Asia Pacific region. And then of course it was really uneven depending on vertical market, depending on product segment. It was the servers that got hit the hardest. And what we did expect, and that did happen, is that we had extreme high growth in the cloud segment. We already had a high forecast for cloud regardless of the pandemic, but cloud responds to that because cloud, it basically helps in times of uncertainty. When you don't know what's going to happen, cloud is very flexible. And if I'm accelerating projects or creating projects all of a sudden, well, I can maybe burst things to cloud more quickly than I can go through a procurement. And similarly, if I'm deferring acquisitions or canceling acquisitions, well, what do I do with my projects? I can move those to cloud, even if I don't get my new or upgraded server in the time frame that I thought. Now, it doesn't fully make up for the loss in the server revenue, but cloud provided a bit of a cushion there to where we saw very high growth in cloud. So I'll look at just some of the details for this. As I said, there's a full hour-long webinar with plus Q&A on our website about this whole thing. But this is what this looks like graphically. You can see the servers at the bottom, which are the largest portion, had the greatest decline. That was down 7% year over year. But cloud, second from the top, actually had a lot of growth and provided that cushion to keep it more of a flat year-to-year kind of market. Storage was off a little bit, but was more resilient than the server spending. Software fell off in proportion to storage. Networks actually got a bit of a bump, which makes sense in retrospect. If people were doing a lot more cloud, they needed some good networking to go along with that. Server revenue market share. The big news here is that HPE and Dell are still essentially tied as the largest vendors in this space. There are some differences here between what we would say and what another major industry analyst that tracks HPC might say. We do not see a big gap between HPE and Dell. We haven't seen it. We've done very thorough methodology rigorously on this. You got to remember, Dell is actually a bigger server vendor at the enterprise level than HPE is. HPE really only keeps up by selling larger configurations on average and doing a little bit better than Dell in the supercomputing segment overall. And I notice I say a little bit better. People say, well, Dell's not a supercomputing vendor. That's certainly not true. HPE has gotten a lot more of the big government lab sales, but Dell has huge academic and commercial supercomputing installations that have been at the top 10 of the top 500 list. It's just not the government lab sales. So Dell is behind HPE by a very slight margin. Then Fujitsu, of course, had a very big gain. They nearly tripled. They were up almost $500 million overall with the revenue from the Fugaku supercomputer. This, again, is different than another analyst reported it, saying it was over $1 billion. That was the total project cost for Fugaku was $1.1 billion. You can read that off of Wikipedia. But if you read Fujitsu's quarterly numbers, which isn't that hard to do, they're right there on the website, you can see pretty directly that the server cost for Fugaku is more around that $450 million range and happened in Q1, Q2 of the calendar year 2020. So they were up, they nearly tripled, but not nearly as much as a different analyst said they were. We added tracking of Supermicro. The notable thing to say there is that a lot of Supermicro's revenue actually shows up on other people's lines because other people will resell Supermicro servers, and we try to count the revenue only once. So we give it to whoever sells it last. Now, the big thing when you look at this graphically year over year isn't just the growth in Fujitsu, but the dramatic decline in the others category at the top, which is where you see a lot of the hit. I mean, sure, HPE and Dell were down in proportion to the market, but that others category, a few things happened there. Now, first of all, we took away Supermicro because we started tracking that. So take that out. And there was some Cray revenue in 2019 prior to the HPE acquisition, which didn't close until September. So that comes out. We counted that in others rather than confuse things by having a separate Cray line in 2019. So those come out. But the bigger thing is that others category is full of a lot of resellers, smaller vendors worldwide. And those smaller vendors who sell disproportionately entry-level and mid-range systems were more affected by the pandemic than the larger OEM vendors who tend toward larger configurations. And that really shows up when we look at the types of configurations and how the pandemic hit those. So that really was a very real market trend. Dell is still the leader in storage. That's because EMC sells so many different types of storage. By the time you look across not just Isilon, but all of PowerVault and Extreme IO, and there's so many different enterprise storage lines going through there that the enterprise storage vendors like Dell and NetApp and HPE, IBM are just so much bigger than DDN that although people tend to think of DDN as an HPC storage company, we've been tracking, just how do you acquire storage? And so often in a commercial setting, my group that controls the HPC budget doesn't really get much of a say in the storage. They just say, here's your partition and here's how much you owe us for it. And that really pulls in a lot of enterprise storage into HPC. The vertical markets is where we saw the biggest variation in what was going on as a result of the pandemic. You can see the sector breakouts there between academic, government, commercial. Academic was down 5.2%. That underperformed what we thought was going to happen back in July 2020, and that was mostly due to a year ago in the fall, students weren't going back on campus. It cost a lot of revenue to universities. And it was really late in the year that we saw that effect of deferred or canceled purchases in university environments in late 2020. So where we had been thinking they would be relatively flat, that wound up off 5.2%. The government sector is the one that really overperformed the previous forecast across the board, especially in national security, especially in national research labs, which is where we saw a lot of the initiatives at a national level to combat COVID-19. So that spending was up there. And then within the commercial segment, which is the rest of the wheel going around, that represents over half of the market, biosciences, the pharma sector, and genomics, that had increased spending that's over and above a normal 7-8% growth rate. And that was in response to the pandemic. But all of the other commercial segments were off and below the forecast. In particular, hard hit the automotive and aerospace industry. Energy was actually down the most. They already had a low price of oil prior to the pandemic. And then just the pandemic made everything worse. People weren't flying, people weren't driving, and energy really was hit more in the recession than anything else. But we mapped this out by system size, by vertical market, by region. It all adds up correctly across all of the different segmentations that we've got. So that's what this looks like. It's going to continue to vary significantly as we start seeing rebounds going forward. This is the geographic segmentation that I mentioned. The big surprise maybe is that Asia Pacific was strong, and where all, that was Fugaku going in there, but also China was at or above the line that we would have had them at. And that's the significant component of the Asia Pacific segment. So all of those were strong. Latin America off a little, but off of a small base. The biggest loser was U.S. and Canada. That was the one where the economy lost the most going forward. The result of that was that for 2020, Asia Pacific and EMEA were almost exactly the same size. In a normal year, we would see EMEA with a bit of a lead, although Asia Pacific has had the higher growth rate. And toward the end of our forecast, even after the effects of the pandemic wash out, it's really best to just think of Asia Pacific and EMEA as about the same size from a revenue perspective. Then this to me is perhaps the most interesting, where we saw supercomputers as a segment, those large systems over $1.5 million. These are different from another analyst segmentations, by the way. They're a lot more even in terms of where the price breaks are. But that supercomputer segment was healthy. It was up 7%. That's partly the big government spending. It's partly Fugaku coming in, but people didn't defer or cancel their planned supercomputing purchases. And then the farther down market we got, the more of an effect we saw from the pandemic economy. And look at that minus 19.3% at the entry level, and think of that in relation to what I was saying about those resellers that are in that other category and how much they were off. The other part of that is the entry level and mid-range systems are the ones that are more easily replaced by cloud in the short term. And that is something that we're seeing as a long-term effect of cloud, where the growth rate of those entry-level systems is really getting depressed by the replacement of cloud. Sorry, my system was hanging up there for a second. Okay, HPC software. The big thing I want to say is that we've introduced a couple of new spending categories. We're looking at software as a service as part of the software budget. We're tracking that. And then in services, we've added 2 new categories with cloud enablement services and managed services and consulting. Those really had to come in. And then in internal spending, not as part of the external product and services, we've also added a facilities outsourcing or co-location bucket to keep track of organizations like Equinix and CyrusOne that are really doing the large scale facilities outsourcing. That's grown as a category. We don't like to play willy-nilly with our categories too much because we want to maintain year over year consistency as much as we can. But really the growth in cloud got to where our other categories were growing, and we found out what was in there. It was time to make a methodology change and add in some new categories. And the results of the surveys really made it clear that was the right thing to do. Here's that big growth in cloud. We track 4 categories within that: raw cycles, storage, PaaS, and SaaS. And notice that we have SaaS here as well as in the software budget. It really depends on how people are buying it. If I go to my software vendor and I'm paying them utility licenses that I carry into the cloud, it's part of my software budget, then it goes over there. If I'm going into my cloud marketplace and paying my cloud vendor to activate those software licenses in the cloud, and it's part of my cloud budget, then you find it here. So SaaS is showing up in 2 different places in our budget, depending on how the users spend the money. And then a couple of notes on the forecast. Ultimately, this is a healthy long-term market, and we're forecasting not only recovery, but cresting $60 billion in 2025. Cloud is the huge growth forecast here. We will see an echo effect rebound this year from COVID-19. A note on CAGRs, there are 2 different ways that we can track this. The traditional 5-year compound annual growth rate is what we would normally show, but that can be strange when your base year in a compound annual growth rate is essentially an anomaly. So we're also showing a 6-year compound annual growth rate, not an additional year into the future, but an additional year back in the past, to use the normal, quote unquote, normal 2019 base to reflect a more stable long-term growth rate that essentially takes the pandemic out of it and say, forget the pandemic, go from before pandemic to the end of the forecast. What's the growth rate? So what that looks like is from 2020 to 2021, we have what looks like this abnormally high growth rate that's essentially a rebound year, hopefully, as we come back out of the pandemic. Now, this is predicated on the notion that we're getting back to normal economic activity, and we have not revised this forecast based on that yet. Dan and I are looking at that as well as some other factors. And if we feel like we're going to miss this in a significant way, we will come out with guidance before the end of the year, but we don't have enough data yet to do that. Keep in mind that, by the time vendors report, we're typically 4 months behind reality. So now is when data is starting to come in about the middle of the year and where we were in the first half of the year. So we're starting to make inferences now about how the year is going. And if we have to pre-announce by supercomputing about this forecast and whether we think that's significantly off in terms of the rebound, we will. The 5-year compound annual growth rate is still a robust 9.1%, but that's really because we're coming from a low 2020 and then get back onto a normal growth curve. If you back it up to 2019, that's where we have that more normal 7.5% compound annual growth rate. The server classes I want to show in particular, because look at the entry level down at the bottom. That's essentially gone flat. Even, when you look at 2019 to 2025, what's going on with entry level HPC? Well, it's flattened out because of cloud. Cloud is growing so much that it's drawing that growth rate away from the entry level and mid range, and to where we're really seeing it now in the growth rates for the HPC servers. So conclusions, this is a long-term stable growth market. Exascale AI are supporting the long-term growth trends, particularly at the high end of the market in supercomputing and in cloud, which is now growing fast enough that it significantly changes the landscape of the market. Now, there is significant risk in this forecast. One, I already talked about the assumption of a resumption of normal economic activity. That's one thing we're monitoring. The other thing that I just highlighted here is this forecast has been assuming that the microprocessor shortages are not a significant damper from the supply side on the total HPC market. We are monitoring that. We are starting to get indications that in some cases HPC deployments are getting delayed. We have to figure out, does that affect enough and for the whole year that it's going to really change the whole year market. And we've begun data gathering on that. So stay tuned. But the data we have so far isn't enough to say, hang on, we're going to miss the forecast. But there is a risk in that, and we are monitoring it. These are all the segmentations of all these reports. You can find them on our website. We've got lots of new surveys that are out, including one we just closed that's in the field. It's a comprehensive look on software. These are not final numbers, but give you an idea of, in a domain, tracking all of the different applications in that domain and what are the most common and what are the typical job sizes. How do they scale on-premise or in the cloud? How do they scale on different combinations of processors or accelerators? So these aren't final things here, but just giving you the idea of the kinds of data that this is going to generate. And then, of course, coming up, the student cluster competition. I'm at the end of my time. So what I'm going to do, though, is just yield to Dan. Dan, is there anything you want to say about student cluster competition before we take questions?
Yes, we are doing it again this year. This will be the 2022 edition. We are reaching out exclusively to historically Black and Hispanic colleges and universities. They don't really get a chance to do this kind of thing very much. We are looking to enlist national labs to help mentor the students and supply the clusters. It's a virtual cluster competition. We're also going to be going out after sponsors and things. It's going to get better and better. And this is how we get more people into our industry. It's one of the best ways to do it.
And there are lots of ways that you can work with us. All right, I am 30 seconds over time, which I blame on Dan for talking too long.
Fair enough.
It's up to everyone else whether I have time to take questions. Thank you very much for having me, as usual.
Thank you, Addison. And of course, thank you too, Dan. Appreciate the presentation, a lot of good numbers and a lot of interesting things to kind of come about. As you know, some of the folks have mentioned here in the comments that the shortage will have a serious impact when the current inventory will run out. No doubt. Mark or Paul, do you have any kind of additional commentary or questions you want to ask Addison?
Yeah, just a commentary, Addison. Thanks for that analysis. It's really insightful. I think supply chain delays, I'm starting to see reports now of 3 or 4 month lead times on total systems. We don't need to say where that's coming from, but that's going to have a serious impact, even out to 5 or 6 months. So if I'm ordering a system and I don't get it for 6 months, I don't pay for it for 6 months.
That's
and we're
right.
seeing that. You can ask, all your OEMs and other sources now. We're getting long lead times. And so I'm having to order now at risk whether I get my system before the end of my financial year in March. Because, of course, a lot of federal procurements are having to come in before the end of your tax year. And so a lot of people now that would be spending, a lot of federal spends is underspend. And we get sight of underspend in December. Because of the supply chain delays now, we won't have the confidence to spend that underspend on equipment because we won't get it in time. So a lot of that end of financial year spend is going to disappear because delays will mean it's not possible to implement it.
I think
Thank you, Paul.
Sense.
That's very helpful data for us to get that in. We've heard similar from other end users. Right now, it's essentially anecdotal, but that doesn't mean it's not valuable. We don't have enough yet to quantify that, but and it's going to be difficult for us to announce anything prior to supercomputing about the effect on the whole year. But I think it will be there.
Yeah, I think it will. So normally there'd be a rash of planning now to try to soak up underspend and get it spent and get equipment in before March. And we'd normally be rushing to do that in December, January. Now I'm having to rush to get those POs out now. So I think, as we say, I think it is going to affect underspend, and throughout the year we're going to get a retardation of spend. I'm seeing that coming through quite loud and clear.
Well, and see, Mark, I see your hand, and I'll get to that in just a second. We did supply side research on this just over the past week. Now, most of the vendors at this point have not released quarterly reports that would reflect the last couple months. We're going to get some of those out in the next couple of weeks for the people whose fiscal quarters align to calendar quarters. So they closed in June.
Yeah, so you won't see this coming through on results, but if you track the lead times vendors are now quoting on delivery when they deliver a quote to a customer, lead times historically would have been 6 to 8 weeks. Now they're 4 months.
Well, I was going to say it actually has shown up on one quarterly report that I was able to find, and that was for HPE. And it wasn't in their HPC group, but it was in their core compute group where they talked about revenue that was falling out because of supply chain delays. And keep in mind that we reassign a lot of revenue from core compute into HPC because they sell things other than craze into high performance computing. So some of it is there.
But it's hard to tell. Well, it's hard to tell what it is in the supply chain that's slowing things down or stopping them.
Yeah. Mark, did you have a question or a comment?
Yeah, so thanks. I was just going to say on the cloud, use of cloud, I may have missed this, but I think all the questions and all the data you have is on the use of public cloud, I think. And so I was wondering about, do you ask people about plans to deploy kind of private cloud? So still HPC systems, but just presenting them as clouds along the lines of what Paul and Stig were talking about in their presentations earlier.
Yeah, we will get some of that as part of this software survey that's out there as we pick up cloud tools in the middleware question. But that's really unsatisfactory because it's only partial.
It's a use,
The problem we get into, believe it or not, is definitional. You would think by this point we would have agreed upon definitions of what constitutes a cloud, and I promise you we do not. Every organization has its own definition of what a cloud is, and if we started asking people, do you have a private cloud, it would come up very high proportion of yes, but people would mean very different things. Now, what is going to have an effect is products like HPE GreenLake, where they're now burying a lot of very large scale HPC procurements underneath services, where it's like, no, I'm not buying a supercomputer, I'm buying a GreenLake contract. Well, okay, but where's the supercomputer cost? Well, it's under there somewhere, and it's not really a public cloud, it's a private cloud, and you're paying for it out of your services budget. That's going to become interesting for us to track.
And
in fact, it's in today.
Yeah.
HPC Wire today, any goes back to HPE for HPC4 refresh via GreenLake. That's going to be a services contract with a supercomputer in it.
Yeah.
But I think it would be interesting to know that some of that data, because then you can have a meaningful discussion of exactly how much cloud presentation there is, and utilization of cloud, whether you're paying for it or running it privately. I think that's
something we could do. We just have to put, as Addison said, some more effort into laying out the definition. Do you use private clouds? Right. Here's what we're talking about as a private cloud. And what are you getting out of it?
To define. Or another great example is look at the UK Met Office, where they've got that, their supercomputers through Azure, but that's not a public cloud either. They're using Azure tools to manage it, but it's still not a public cloud.
It's an outsource.
It's an outsource,
yeah.
Thank you.
Super, but super analysis, Addison, really useful. Thank you.
Any other questions, comments, concerns, complaints?
I do want to acknowledge the fact that we are 20 to 25 minutes over where we are. And I would like to make sure that we get to Andrew Davis. I know he's been waiting really patiently. So thank you, Addison. Thank you, Dan. Appreciate
Thanks, Brian.
Thank you.